Welcome. Thanks for attending the session. Good to see you all, and thank you again for joining us. Important debate, this one, very much in the news, with the US, Mexico, Canada, Argentina moving to T+1 already. Other nations talking about moving to T+1 in the EU and in the UK. So we're going to explore today whether or not markets in your region should also move to T+1. Before we get started on that, like we said, there is a question. The QR code should be appearing on the screen behind me. So the question is, given the global markets are moving to shorter settlement cycles, should Arab markets also move to T+1 settlement? So we'll come back to that question to see the results of that in just a moment. But first question to you, Wael. So given the trend of moving to shorter settlement cycles around the world, what do you see as the pros and cons globally, and what knock-on impact could there be for the Middle East?
Thank you, Gerard. Allow me to say this. مساكم الله بالخير جميعا. First, I would like to say this in Arabic. Allow me for this.
A bit closer to
أشكر الأخوان في الاتحاد على رأسهم الأخ رامي والأخوان في بورصة قطر على حسن الاستضافة، وهذا شيء مو غريب عليهم. So back to your question. If you see today, consumer can buy and receive their airline and train tickets, I would say, in few seconds. And also they can process their payment and exchange the currency almost real time. So on the financial market, I think the general trend is to go for faster settlement cycle. We saw India moved first on T+1. As you mentioned, US, Mexico, and Canada will join in few weeks. UK already announced their plans to move to T+1. EU also is consulting to move to T+1, waiting for their report that will be published third quarter this year. There will be some, I would say, benefits, no doubt about this, but also there are challenges. But let me start with the benefits of shortening a settlement cycle. Shortening a settlement cycle will put more investments on the automation side. And this definitely will improve the market efficiency. That's one. Second, it will allow for more alignment with international markets, where the cross-border participants will get benefit from this, which also will benefit their investor on the efficiency side. Also, shortening a settlement cycle will allow to bring the cash, I would say, earlier, which will also improve the market and participant resilience. Also will reduce, I would say, the funding requirements, since you will be now shortening a settlement cycle, for example, from T+2 to T+1, so funding will be decreased. Also, the counterparty risk and the market risk will be significantly reduced as a result of this changing. Now, this is the positive side. Let's go to the challenging side. So I think shortening a settlement cycle, for example, comparing to when we were in T+3 and moved to T+2, I think that's changing from T+2 to T+1 is much challenging than the earlier one, because now we have only 1 day to conclude all the post-trade services, and this will be very challenging. And imagine also for cross-border investor, what is the time, and they are working in different time zones, they will require to conclude all of this activity. They used to have it over 2 days, they now have to conclude it. Even some changes they have to do it on the trading day, which is a bit challenging. This is also a bit challenging on the liquidity. There will be a big pressure on the liquidity, because now you have to bring your cash earlier than on the current settlement cycle. And this will also disallow for the netting efficiency on the CCPs, because now you will have only 1 day, so the netting efficiency will not be at the maximum compared with T+2. Overseas investor also will face additional challenge, which is the currency and FX rates. They need to execute all of this FX trade 1 day earlier because they have to fund their settlement obligation on T+1. There will be also challenge on the sales management that could be also pressured as a result of shrinking the settlement cycle. Cross-border settlement also will be, could be impacted as a result of this because you will have market that they are different time zone and even different currencies. They will have also challenge managing cross-settlement between these between all of these markets. So this is maybe something we need to consider when we see these two markets that leading this transformation to T+1, which is mainly India and US. There is a main difference between this market and other markets, which is these two markets highly depend on the internal demands. While other markets, they have the mix of internal and external. And this is something we have to look at it carefully before we make a decision, especially in our markets, do we need to follow the T+1 or not? Maybe something we have to learn from Taiwan. Taiwan went back from T+1 to T+2 because the T+1 hindered the access to their market from externals. So this is maybe something we need to learn from, especially in our markets. So time will tell if the benefits will prevail on the challenges. Widespread of adoption of T+1 will take time. If we know that the market, the international market takes about 5 years to move from T+3 to T+2, I think it will be a while for us to see adoption on T+1.
So I recognize a lot of the issues you were talking about there. So before I worked at Nasdaq, I worked at the Hong Kong Stock Exchange, and they had the Stock Connect program, which was China. So China is on T+0.
Yeah.
So when I heard that some markets were moving T+2 to T+1, I thought, what's the big deal? But actually, when you start to understand the problems on moving to T+1 for international investors and FX and all the things you mentioned, you begin to understand why you need to be careful about making that move. So do you think it's, given what you said, do you think it's inevitable that markets in the region will move to T+1, and should you start preparing now?
I think we should look at this carefully. We should watch. Time will tell us if we can manage all those challenges. I think I'm talking about Saudi markets. For us, we are ready from the technology, from operation to run any settlement cycle. I think it is the demand of the market. If they are ready to move to T+1 or even T+0, I think we will evaluate it. But my personal view, I think, considering that we are opening our markets for locals and overseas investors, I think always we need to consider the challenges that they will face if we shorten the settlement cycle, consider the different time zone. So it will take a while.
Thank you. So let's see what the audience said in the survey. Should be able to see the results here on the iPad, but they don't seem to be here. So I may have to take a look around. So the question was, should Arab markets also move to T+1? And we have nearly 90%.
Interesting.
90% say that they should move to T+1 as well. So it sounds like you should start preparing. Abdulla, let me come to you now. So we see from other markets moving to T+1 there are some negative consequences and perhaps unintended impacts as well around operational risk, funding, FX, etc. So what do you think will be the impacts of your markets, and is the risks that we identified, are they worth taking?
Thank you, Gerard. I wish my question was before the voting. I would like to take this opportunity to thank my brother Abdulaziz Al-Amadi actually for his generosity and hospitality. It's always great to be among such amazing audience and panelists as well. Whether we like it or not, in today's world, speed is like a sense, from the same day deliveries to the same day messaging to the same day settlement. So I've been under pressure right from the beginning when I joined the industry, which is the clearinghouse industry. So I've been accused by my colleagues within the industry and the stakeholders saying in Saudi it's T0. Remember, correct me Wael if I'm wrong or not, because in early 2000 in Saudi it was a T0 settlement. And for us, it was really very difficult for the main reasons that the foreign ownership was open up to 100%. And for us, it was very difficult. It was not the case also in Saudi. So I was always the bad person for 20 years, unfortunately. Until lately we could see that in the region, we've seen a shift from T0 to T+2, and even in the world in the past 5 years, we've seen a positive shift from T+3 to T+2. And we've been doing in different events. For me, chairing the WFC for 3 years, and then chairing the African Middle East Depository Association for 6 years, we have done so many votings, and we've seen that majority of investors were looking at T+2 with an average of 80%. Surprisingly, that we can see today 90%, it's because the trend that is happening in North America. And also, I think in Australia, if I'm not mistaken, in Singapore, and then India recently, we have seen a market with multiple settlement cycle. And I also wanted to interfere with my colleague Wael to see what will be the impact of having a market with multiple settlement cycle, i.e. you have an option to go for T+2 or T+1, or sometimes an option to go for T+0, T+1. Would that be acceptable? So would that impact the index? Would that impact the foreign ownership? So that was the main challenge. If I may, I don't want to make it longer because I know that even myself, I'm very hungry, so the next is to go for lunch, so I will stop on that stage.
Thanks, Abdulla. Christian, turning to you. Is it possible for you to outline for us what you think are the technical challenges in moving to T+1? And perhaps first of all, from the perspective of an FMI, and secondly, from the perspective of a market participant, so say a broker or a custodian, for example.
Yes, certainly. First of all, it's a great pleasure and honor to be here on this panel, and thank you for the invitation from AFCM and QSE for hosting the event. So I would first of all say that I totally agree with the comments made so far about the pros and cons of the movement. And I think just based on the panel there, it may be a question of when rather than if. And I think the timing issue is key on this. Here in Qatar, we only last month transitioned from T+3 to T+2. That was a relatively smooth event, but I do totally agree that it's a real step change from T+2 to T+1. And I think we can learn lessons from other markets. My colleagues in the US have been working very closely over the last 18 months on that rollout. And of course, the US market is unique as far as scale and reach. But I think to answer your question, with all these initiatives, it needs to be a collaborative affair with all the participants. clearly the FMIs, the depository need to play a leading role. We see in the US DTCC how that has rolled out, and that was very much in collaboration with SEC there. How much of the rules needed to be mandated in regulation, and there are the new protocols in place for the daily settlement, the need to meet the time frames, allocations by 7 o'clock in the evening. The new certainly in the US, they introduced this principle of affirmation at the DTCC. Effectively, that's matching. So I think this was all done as a consequence of the consultation with the market as to what would work and how to mitigate many of these risks, particularly around the issues with respect to funding, failures, and the like. So clearly, a lead role I think has to be played by the FMI in this, it's important that all the participants in the value chain are involved. Other key players, without a doubt, are the custodians. The custodians, they are in a position where they can provide a lot of the technological solutions to their clients, and very much help to bring their clients on the journey. So it's really important that any market that is considering this has to look across the whole ecosystem, because inevitably it will change working practices. In a T+2 world, you can, for example, rely on, or lots of places rely on batch end of day to do their processing. With T+1, a lot of that might need to go to intraday, for example. Other examples are to do with the actual working hours, operating hours that everyone in the value chain might need to employ. I mentioned sort of the late cut-off and deadlines. So that has a big ripple impact of all market participants. Looking at broker-dealers, for example, there is an assumption that broker-dealers will wear the cost, the funding cost on behalf of clients. Maybe that will change. I think it will be very interesting to see, following 28th of May in the US, what the lessons learned from that. As we in the UK, we're putting our task force together for 27. There is time to plan and analyse this. I don't think there's a rush. There's necessarily a rush to do it, particularly with all the other initiatives that are going on in the capital markets here. But the lessons here are, as always, collaboration, understand all the consequences, involve all parties as appropriate.
Thanks, Christian. Yeah, I think technology is a real enabler here. I think we'll end up with a lot more event-driven processing rather than batches, real-time exception management. That kind of thing is really going to come to the fore. Thanks for that. Haitham, turning to you. Should we only think of moving to T+1 as a post-trade thing? What could the impact be on the trading end of things, if any at all? Can you foresee anything?
From my point of view, that we need to see the participant whether they are ready to handle T+1 first, whether they want T+1. So if we go into the practical part of having a T+1 settlement cycle, especially taking into what my colleagues mentioned, the time zone differences, the the settlement is not just connected with the post-trade services, it is also connected the banking system for the payment as well. So if we have a straight-through processes, is still having two separate systems. So whether it's practical to help or accommodate the requirement of the international investors, it is a bit challenging to move to T+1 unless we have a clear straight-through processes connecting two different venues together. So talking about post-trade being creating a resilient market, making sure that there are no risks, lower risk, lower defaults in what sense? But on the trading venue side, let's see who are our players, mainly in the market. If we are talking about retail, their requirements is totally different. Actually, they're playing a bit on the financing side, taking into consideration the accounting practices of the brokers when they have different between the cash and the accrual systems. Because they trade today, they can sell tomorrow without even having an aging, without getting into the aging report of the broker. So that is a part of financing if we talk about retail investors. And when we go to the markets, let's say, taking into consideration Oman, for example, 30% of the trade comes from the retail. So whether the retail will accept a shorter settlement cycle, the longer for them is a better financing. And the other side, if we talk about the institutions, for example, a shorter settlement cycles means more liquidity because they can use the funds for the next trade. They are selling today to buy tomorrow. So we need to find the balance whether that will create a better liquidity or less liquidity. And we need to see our institutions whether they are more into passive or active trading. So the pattern in GCC, it looks like we are into T+2. It's the best acceptable model for us for now, taking into consideration the balance between the retail and, because we do have more retail than the others. So my views will look into what are, as Wael mentioned, the systems are ready to handle even T+0. But do we really need that? Whether that will help, then we need to check our players and make sure that it fits most of the players and it fits their requirements.
Got it. So it's complex.
It is complicated.
Abdulla, back to you. So thinking about structural characteristics of markets in this region, is there any reason to think that a transition to T+1 here would be more or less difficult given the structure of how things operate in this region?
As a short answer, it will be more difficult for a few reasons that I'll mention in a moment. But since there's a kind of comparison between this region and US and Europe as well. I had an internship in New York Stock Exchange, but unfortunately, during the internship, before I fly, the 9/11 happened. But again, I managed to reschedule for the internship. It was a few weeks after the 9/11. I was sitting in Merrill Lynch offices where the ceilings were completely destroyed, and just looking right away on the 9/11 on the World Trade Center. I met Marianne, the ex-DTCC. I don't know if you remember her or not, Chris. So for the DTCC, moving to T+2 was a dream at that time, and today it became true. So in Arab stock exchanges, I think if we look at the market infrastructure, we have markets with no CCPs, markets with open foreign ownership, where we still need to have the proper time zone in order to the settlements to make the settlements happen. So historically, at least 5 out of 100 transactions executed are failed. So imagine that those 5 transactions, if these are block trades, it has to be settled. So shortening the settlement from T+2 to T+1, it's a huge challenge. In our region, I would say in our board, it could be with the systems, with the different kind of, payment gateways, but still discussions with the SWIFT as a platform, we could see lots of challenges. Challenges are happening, comparison to US, Europe, with the time zone difference, and of course, US to our region. As far as Bahrain is concerned, the T+2 been there since the establishment, and we could see at least in the upcoming 5 years that T+2 will still remain.
Great, thank you.
Just allow me to mention something. Back to this, it is actually one of the main participants on this is the global custodians, and how the local custodians act on the instruction they receive from the clients. And once we just reviewed how many of the accept and reject transactions happens within T+1 and T+2. And we found that 15 to 20% happens in T+1, and the majority happens in T+2. So let's say 90% of that finished in T+2. So going to T+1 will shift like almost 65% of the transactions to be pressed into a shorter time, and make sure that most of the transactions get accepted and lower. So as what Abdullah is mentioning, that the chances of having rejected transaction will be higher, then default will be higher.
If I may, just to get away from this challenge, the beauty in Bahrain is that the settlement happens on T+2 before the trading session. So as an argument, I would say that if it is on T+2 before the trading, it can still consider to be T+1 by end of the day. I don't know if my colleagues agree on that or not. There's a difference because when you say T+2, if it is by end of the day, so it's a real T+2. But if it is before the trading session, I would still consider T+1.
It's a good point, and just to follow up on that question to Christian, because the asset manager and the global custodian relationship here is one of particular importance, because those allocations have to be done between the broker and the asset manager in order for the infrastructure to know what to settle. So Christian, what do you see are the main challenges around managing standing settlement instructions, managing allocations, etc.? And what's the role for technology in that space?
Yeah, I mean, the challenges are, of course, all to do with timing and being able to have all that information in place intraday effectively. I think, yeah, allocations is absolutely key. I think one of the possible advantages of a market with smaller market participants is that you have the ability for a technology solution to be able to implement it for everyone, as in, the sort of a platform that can deal with all the T+1 challenges. When you've got a much more diverse market with very different operating models, that's harder to implement. But yes, no, I think that that relationship between the brokers, the relationship between their clients, and as I come back to sort of the custodian as well, these are all the key elements within the chain to make this successful. And yeah, that enhanced data exchange and transmission, it will need to be enhanced to have that as STP as possible is what will make it successful in any market.
Great, thanks. Well,
maybe I agree with my friend Abdullah about settling in early morning and T+2, consider somehow it's end of T+1 settlement. It is something we witnessed actually in Saudi Arabia, because on our current infrastructure and model, where we have a CCP in the cash market, we found that actually we designed the settlement engine to really can work real-time settlement. And, but we decided among our participants that we will run 3 settlement batches on T+2, where the first batch will be 20 minutes before the market opening. This is to allow whoever is ready with the cash and security that we can settle it before the market opening. And this is actually, we found it over now 2 years of running this settlement practice. 80% of the collateral locked at the CCB will be unlocked, and this will be reinserted on the trading session that will start in 20 minutes. And this, for us, whatever failed, we will not consider this as a failure, because there will be another window which is at 11, and there is another third batch settlement which is at afternoon, where we will run the settlement batch. But I agree, technology helped us a lot to run the settlement more frequent. I think, again, to the question about will the technology decide on moving to T+1? I don't think. I think the main driver, at least for our markets in the region, will be the demand. Will decide. I don't think technology will be an obstacle.
Okay. And zooming in a little bit on how CCPs will work potentially in this new T+1 world. Can you tell us something about how you think about liquidity risk in pre-funded markets?
Yeah.
And also perhaps touch on whether there's any change to the way in which you model risk in a T+1 world.
Yeah, so if we start with the pre-funding, I think pre-funding is a good model that supports any market in its initial stages. And this is what we had on Saudi market. We used to be running in pre-funding environments back in 2017. However, this practice hindered the market growth and also put a big pressure on the liquidity. So we decided back then in 2015, when we designed the transformation on the financial market in Saudi Arabia, that we need to decide on new measures that will help us to reduce liquidity pressure, as well as building a safe, efficient market. And we did a lot of structural changes on the markets, and one of the main one is the CCB. One of the main changes we did at the CCB on the cash markets. We are one of a few countries in the region who run CCB, proper CCB on cash markets. And we believe the CCB could help to reduce the liquidity pressure. We used to have it on the pre-funded environments. And CCB, through its technology, through its, I would say, the nature of business where they do the netting, I think this has reduced a lot of funding requirements, because netting the obligation reduced the, I would say, the cash required on the CSDs for the settlement, especially for the very active market with a lot of intraday trading. They will enjoy the netting that CCB is providing, where this net could offset the margining requirements. CCB plays critical role in this regard. Beside other I would say, advantage of the CCB, one of them, I can say it's the margining system. I think, especially on nowadays when we have a good computing capacity, that's allow CCB to provide technologies and tools to market participants to have almost real-time margining system where they can monitor the obligation of their investor at the member level, where they can, I would say, accurately decide on the margin requirements, which by far will be less than the fund requirement without this, I would say, sophisticated margining system where the funding will be less for the participants, will be less for the investor. Also, moving to T+1, maybe there is something the CCP could also allow, which is the margining requirements will be reduced compared with 2-day settlement cycle. And if you run on 2+1, even with the CCB, some CCBs estimated there will be 40 to 60% reduction in the margining requirements. And this could be an advantage for the participants, that they will require less funding for their obligation against the CCP.
Got it, thanks for that. And just and Abdulla, coming to you on funding in particular, so pre-funding seems to be one of the consequences. What other, so maybe just touch on pre-funding in your market, and what other consequences, what other changes in structure might we foresee if we move to T+1?
Thank you, Gerard. I think an interesting initiative that might be kind of, a bridge to different settlement cycles in the region or worldwide. If we take Tabadul Hub initiative as an example, I'm sure most of you in this hall that heard about Tabadul Hub initiative that is currently being implemented in 4 countries. 3 are in GCC, Abu Dhabi, Bahrain, Oman, and just last week also Astana went live. We have 10 plus stock exchanges are joining very soon. So if you look at, let's say, for example, between Bahrain and ADX, we have 2 different time zones, not a huge difference. However, when it comes to holidays, so we have Saturday and Fridays and ADX, and then we have Sunday and Monday in Bahrain. For us to overcome, the funding management, there are kind of collateral management in place, guarantee fund that is being applied on the participants, brokers, as well as the clearing houses. So I think Tabadul Hub as an initiative would really overcome so many risks associated on the transactions executed. It could be not up to 100% that could resolve the issues. However, I can see that in place in real time, we've seen that the risk could be covered, mitigated. When we went live, we could see no settlement failure within the past 2 years when it comes into transaction. Volatility was not high, volumes were not high, but we can see that this initiative is a good initiative to overcome any risk associated from different settlement cycles that are implemented in stock exchanges.
Great, thank you for that. And continuing in that vein, Haitham, penultimate question to take us home. So thinking more generally and not specifically about settlement cycles, what do you see as the benefits of potentially harmonizing things like time zones across the region, and what would be the impact on activity between markets?
Actually, we have studied this issue with the GCC mainly. One of the initiatives was to harmonize the time zone of all the exchanges. But we found that the wider the trading session, the more participation comes from the cross-border activities, especially when we talk about international investors. So that time zones allows the investor to get into the market, get out, and then use the remaining space to get into the other markets. We have only 1 hour difference between time zones of GCC, for example, but if we want to link with other markets, especially when we talk about cross-listing abilities, arbitrage, and others, then the more wider the sessions, the better it gets for the investors to shift from market to another. And that's where we saw it. So we have decided to keep the time zones as it is. We have never tried to harmonize with the GCC. And actually, we keep studying whether the session timing is good enough for each market or not, and whether it's overlap with the other markets. So the overlap is good. So they have wider access to wider products on the same time. But sometimes if we have extra times in the other market, that will allow the investor to shift to the other markets and use that space. But I want to get back to one of the legal issues related to the demand on trading and the trading activity if the settlement cycle is shortened. We have differences between the GCC practices itself, and I believe there will be different practices with others, is how you transfer the ownership, the rights and liabilities of the securities. Like in Oman, the ownership transfers on the day of transaction, on the time of transaction. So you have the whole privilege of using the whole benefits of owning that stock, so including the dividend distribution, and it will be considered as a record date. Where I believe in our neighbor country, the UAE, it's totally different, the settlement day. So that difference itself will create a difference on the liquidity. So if we have shorter settlement cycle for markets that transfers the ownership, the rights and obligations on the settlement time or settlement day, that will benefit from shorter settlement cycle. But for us, it is just the financial settlement will be delayed, but the ownership has transferred totally with the rights and benefits of owning the stock.
Got it, got it. Now, gentlemen, we're standing between the audience and lunchtime now, but I just have one final question for you. It's a quick fire, yes or no answer. Starting from the end, Christian.
Will Middle East market?
Bad timing. Will Middle East markets have moved to T+1 within the next 5 years? Yes or no?
5 years.
Crystal ball time.
Yes.
Yes. Abdullah.
5 years, no. 6 years, yes.
Maybe. I'm not.
That wasn't an option.
I would say maybe in 5 years, yes. Not before. It will take a while.
Haitham?
I don't think so.
No. Okay, there you have it. Thank you, gentlemen. That was great. Audience, please join me in a round of applause for our panel.